Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 18th of April. I'm Daniel Lam, your host for the podcast. My daughter was born yesterday. Both mother and child are healthy. For me, this was a major relief after enduring much pressure since the middle of February. From the Hong Kong Chess Championship, looking after my baby boy during my wife's late stage of pregnancy, the Asian Games selections, and so forth. In the financial markets, are we finally seeing some relief from the threats of inflation and rate hikes? The recent moves in the key indicators are showing signs of caution. For example, the US 10-year yield is challenging key resistance at 3.6% after rebounding from the bottom around 3.2% earlier this month. The DXY had also been picking up from the last few sessions and would actually break its short-term weakness if it rises above 102.8, which is less than 1% from the current levels. What could be the reasons behind all these? Well, while inflation and growth have been easing off, they are falling at quite a slow pace. This may prompt Fed officials to stay cautious. For example, the Richmond Fed President Barkin said that he would like to see more evidence of the US inflation easing back to the Fed's target at 2%. The persistently strong US employment data is the key reason for this conservatism. Moreover, the fact that the current earnings from the US financial sector has been going well so far may mean that the Fed may not go so easy on the tightening as volatility in the banking sector subside. Thus, while the S&P 500 index has been rebounding from key support level at 3,800, we would take this opportunity to keep rotating into fixed income assets. The markets could have been pricing in an overly optimistic Fed pivot here. Investors should be adding to multi-asset income strategies because credit spreads have also been widening modestly across many income assets. Technically, it is interesting to add to income assets if US 10-year yield does overshoot further into the 3.6% to 3.9% territory. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.